keynote yacho tine one isipo Ken Sharp na president avapo. Changu float, all right, it's okay. No problem. All right. We are now on
This is Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Eben Mabunda. Let's get started. Today, we turn the spotlight on Westprop Holdings Limited, a player in Zimbabwe's real estate and property development space, following the release of their financial results for the year ended December 31st, 2024. The group announced an 80% surge in revenue for the year, reaching $29 million from the prior year's $16 million, driven by increased demand for residential real estate and successful project execution. Listed on the Victoria Falls Stock Exchange, Westprop's gross profit increased substantially by 90%, from nearly $6 million in 2023 to $11 million in 2024. The group reported a 54% decline in profit to $18 million for the 2024 financial year from $39 million in 2023. Now, this was on the back of a 62% decrease in fair value gains on investment property to $18.84 million from $49 million in the comparative period. Operating expenses also increased to $8.64 million from $5.18 million US, fueled by the company's expansion drive, new acquisitions, and a sales pipeline now valued at $175 million. We speak to Westprop Chief Executive, Mr. Ken Sharp, right here on Beat the Market. Beat the Market, we'll be right back. Don't go anywhere.
Dental checkups, experiments, games.
The mixture is making bubbles and the bubbles have changed color. Our balloon has been filled by carbon dioxide.
We have it all right here on Happy Sprouts. Catch us exclusively on Citian Prime, DSTV channel 294.
In a land where traditions run deep, where the soil holds the secrets of generations, and where dreams are sown alongside seeds, a new generation emerges. Welcome to Young Seeds. Get ready to embark on a journey like no other as we shine a spotlight on the dynamic and inspiring young farmers in the heartland of Zimbabwe.
To do it because plants will die, plants will get infected by diseases.
I tried to do mixed farming. That is also putting tomatoes. I have half a hectare of tomatoes.
Every 40 days, it has to be giving birth.
Produce a good quality fruit size. Calves are kept in different pens, basically so that they don't spread diseases to each other.
My name is Tarios Gauke. I'm a rabbit farmer.
These young farmers are revolutionizing traditional practices, embracing technology, and finding sustainable solutions that will shape the future of agriculture. So, let's get our hands dirty.
welcome back to Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. Now, Westprop Holdings, a prominent real estate company listed on the Victoria Falls Stock Exchange, has recorded a 54% decline in profit to $18.26 million for the full year ended 31 December 2024 from $39.43 million in 2023. Now, of course, this is despite the growth that has been witnessed in the other aspects of the business, especially from a revenue perspective. Now, I'm joined in conversation by Mr. Ken Sharp, who is the Chief Executive of Westprop. Mr. Ken, hello and welcome to Beat the Market.
Thank you, Eben.
Fantastic. Now, let's talk about how it is that your revenue increased by 80% to $29 million. What were the key drivers of this particular growth?
Look, I think it's part of careful planning. We've been building up our portfolio, our pipeline, our product pipeline for several years now. And last year we saw the culmination of a lot of our products coming to the market, coming to fruition. So if we look at places like Pokogara, where we have 69 units of townhouses under construction, we were fortunate that a lot of those units came through last year and completing them now this year. In June, we'll actually be finishing the last remaining part of that development. Other products like on Millennium Heights, Block 3, we successfully sold out and handed over. Block 4, we've been selling. So 2 new buildings in the market last year. And then, of course, Pomona City, where we had Phase 1, B and C, 550 stands that we introduced into the market. And a lot of those sales started to come through. So I think it's about the accelerated growth plan that we've been on since we went into the public domain, since we listed. We've got ambitious growth targets. As you know, we're growing to $100 million sales by 2030.
Right. Let's talk about the gross profit, where again the figures doubled and the cost of sales declined proportionally. What operational efficiencies were able to employ that resulted in the doubling of the gross profit?
Thanks for that question, Evan. You know, the thing is with us, again, very strategically, very tactfully, intentionally, we were downstreaming. So we've started integrating some of the manufacturing processes into our product offering. For example, last year we introduced our own aluminium window and door frame manufacturing unit. We invested about $2 million and we were able to then reduce the costs. So improve the quality and reduce the costs, which adds to our gross profit margin increasing. But also because of the economies of scale. So I think a lot of the products that we're now developing, we're getting into more economies of scale, and we're able to operate more efficiently with that.
Right. Then, despite the doubling of the gross profit and, of course, the 80% surge where the revenue was concerned, a profit declined by 54% to $18 million. Can you explain that movement there?
Sure. So that's not really your operating profit. That's more of a valuation model. So we look at the valuation of our properties every year, and we've seen an acceleration over the last 3-4 years of those property values. We are reaching a ceiling now, both as a company and as a country. I believe we're coming closer to the ceiling. We're not there yet, so we will continue to see more increased valuations coming through. But I think a large portion of that valuation was made last year in last year's results. So that was an abnormal year of profit.
Right. Operating expenses increased in the year, of course, to $8.64 million. Can you unpack the key drivers of those operating expenses?
So just scaling up, the business, we've been scaling up since the listing. We've been employing more people. We've moved to a larger head office. It's 3 times the size that we were prior. So with that expansion program comes higher costs, higher expenses. And as we gauge towards the $100 million revenue, we need to actually continue to increase operating costs. This year we have made some cuts, so we've actually made some reductions in the beginning part of this year, which will come through in this year's performance. But last year I think was largely, gearing up to the maximum. So we wanted to, and we managed to increase both HR resources as well as physical equipment. We bought a lot of plant, yellow plant. We brought in about $3 million of plant last year. So coming with that new asset, that new equipment is higher operating costs.
Right. Let's talk about Pomona City, which contributed over 50% of the group's revenue. What's your strategy where the diversification of your revenue is concerned?
I think Pomona City was largely phase one we're talking about, of course, because phase two is much bigger. But phase one was largely the sale of stands. So we were servicing the land, putting in the infrastructure, so roads, stormwater drains, sewer connections, water connections. And as we accelerated that expansion of those stands, it's about 700 stands in total, we managed to reach a point where we maximized the sales last year. I think it has slowed down since, and obviously in phase one, we're coming to the end of phase one this year, we're down to maybe 50 stands. So as that happens, naturally, the other products will then take over in the portfolio.
Right. You've grown your development pipeline to a whopping $175 million. What are the headline projects that we should watch out for in terms of completion, sales, or even investment and milestones, perhaps, over the next 12 to 18 months?
So, of course, on Pomona City, to take off from that line, the stands will be coming to an end this year. So I would envisage by the end of this year to have sold out of that. So some of the pipeline of that 175 million is still Pomona City. But going on this year and beyond this year would be the start of phase two, which includes the apartments. So we've just launched in phase one of the apartments. We've launched 450 units at Pomona City, and we have about another 300. So total about 750 flats that will be coming out of Pomona City. And that's contributing quite a large number in that pipeline. And then, of course, we have Millennium Heights, where we currently are building the Radisson. We're just about to break ground on the Radisson next week. On Wednesday, we'll actually be, I think the day this program is out, we'll be breaking ground, so today. And we're excited about that because that's the fifth block. So the fifth building we've put up in that development. We already have done the design and launched block 6. So this year, we'll have 3 blocks under construction at Millennium Heights. And then, of course, the big project is the Hills. You know, the Hills, which is in Warren Hills, just between Mayrick Park, Mulberane. That represents over $300 million of product availability. And phase one of it, which we're launching now, is just under $70 million of product that's on the market available now.
Right. You recently handed over 112 luxury apartments at the Millennium Heights and are accelerating Block 4 construction, as you alluded to. May you highlight some of the developmental aspects of the particular project, especially in light of how the world has been taking on a green dimension in that regard?
You know, Millennium Heights is a very exciting product because often I've been talking about bringing Dubai to Zimbabwe. So when we think of Dubai, we think of ultra-modern buildings and roads. And if we look at Millennium Heights as a development on its own, it's 1,000 units in total, 1,000 flats. So blocks 1, 2, and 3, as you mentioned, block 3 was the largest, 112 units.
Right.
And with block 4 now under construction, block 5, which is the planned that development, of course it's part of the larger community. So this aspect of lifestyle living where we talk of live, work, shop, play is going to be incorporated into that. But even as a microsystem, if you look at the Millennium on its own, the Millennium Flats, it's a self-contained gated community.
Right.
So when you drive into the gatehouse, there's CCTV cameras that have facial recognition, number plate recognition. It's a seamless experience to driving into the development. Very secure. CCTV cameras, 24/7 surveillance on the perimeter. And then once you're in the estate, we want you to feel like it's a self-contained estate.
Right.
So once you feel it's safe and secure, you know that you can get up into unit and there's solar power. So on block 3 that you mentioned, it's got 280, I think, panels on the roof, providing just over 200 kilowatts of power. And that is connected to a battery system, which provides 24/7 power for the lifts. The backup water system that we have as well is powered by solar. So even if we're completely off-grid, Zissa goes down, the lift still works, you can still get water into your units. And then, of course, because we reticulated the building with gas, which is one of those environmental aspects that we really look into, is that the efficiency now of the use of heated water coming from the gas, of cooking with gas, those type of things reduces your electricity bill further. And the gas is centrally reticulated, so it means you don't need to buy gas bottles on every unit, which looks ugly, difficult to manage and maintain. We have centralized gas storage tanks that supply the whole building. And then we have smart meters. So you can prepay with our app now. We have a Westprop app where you can go and buy your gas, you can buy your water, you can buy your electricity through that app, and then have the convenience of it being supplied into your unit.
Right.
Besides that, one more thing. The building is green literally because it's a green building in terms of the plants. So it's the first building, I believe in Zimbabwe, the first building we've done like that, where we've planted entire balconies, planters, that you can grow big shrubs, bushes, and even in Block 4 now, whole trees. So the building, as it grows, will look more green physically.
Well, time for us to take a breather. After the break, we continue our conversation with the Westprop Chief Executive, Mr. Ken Sharp. With the market to be right back. Don't go anywhere.
Didn't graduate. I guess I blew it.
You couldn't advise him anything. He would just look at you and say, so who do you think you are?
We were just like really spoilt.
And then they just give me the receipt and I'd pay.
The guy walks in one day and then he says that he wants to make a movie.
He was blowing the money.
There was just like this habit that he had where as soon as he got money, it was gone.
I just didn't have the skills or the experience.
This money, I could see it disappear so fast.
Welcome back, gospel music lovers, to another season of My Ultimate Gospel 10. Your ultimate destination for soul-stirring melodies and inspirational stories.
Man, prepare me for a good day.
And God is faithful because He's holy.
Like, wow, this is beautiful.
Each week, they'll be revealing their top 10 gospel songs. Meet Miss Becky K, the dynamic and passionate new presenter for Season 3.
If you are ready, let's get into My Ultimate Gospel 10.
Premiering soon, only on ZTN Prime. Stay tuned and let the music uplift your soul.
Dental checkups, experiments, games.
The mixture is making bubbles and the bubbles have changed color. Our balloon has been fueled by carbon dioxide.
We have it all right here on Happy Sprouts. Catch us exclusively on ZTN Prime, DSTV channel 294.
Welcome back to Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Eben Mabunda. Now, we continue our conversation with Mr. Ken Sharp on the performance of Westprop. Right. You mentioned, of course, the Radisson, structure that you just recently launched. How's been perhaps the investor uptake where this very initiative is concerned? And if you may shed more light in terms of how you are ensuring that it strikes that degree of market relevance.
So if we looked at the previous products on Millennium Heights, it was more unit-based ownership. So the unit itself, the apartment, the flat, one buyer was buying one apartment. And what we were seeing is that a lot of these units were being put back into the market with Airbnb and rented out daily. In fact, one of the buyers who bought in Block 1, we know a success story that the price he bought the studio for was returned to him just in over a year of rentals.
Right.
So very high return. And we've discovered that the demand is quite high for daily rentals. There's also not really a branded serviced apartment building in Harare or in Zimbabwe today. This will be the first one. Radisson itself has not been in this market before. They've tried to come in.
Several times.
Several times. And we are the first partner of theirs now to actually break ground on a building that is going up. So the uptake has been good. We've sold about 54% of the building to date. It is a REIT, so it is listed, registered at the Zimbabwe Securities Exchange Commission as a REIT, which allows a more tax-efficient structure for the shareholders, or unit subscribers they're called in the REIT. And the units themselves we're selling at $500. So we believe it's an affordable enough product that it can reach a large number of people. So, even yourself, I'm sure, Ibn, you'd find $500 to come and take up a unit.
Right.
And you could say, I'm the proud owner now of the Radisson in Harare. So we want more retail investors to come up and take up that ownership. But of course, we're talking to the pension funds, the insurance funds. We have a registered asset manager, Noro Asset Management, who is actively marketing that in the coming weeks. So as we launch next week, they'll be taking that out to the bigger players.
Right. Speaking of affordability, there are concerns that Zimbabwe does not have a functional mortgage market, as it were. At the same time, some quarters would contend that the prices of some of the properties in Zimbabwe are relatively higher than if you compare with the regional counterparts. How do you respond to that, and what's your position where these issues are concerned?
I think they're a function of each other. So in a circular economy where you have a functioning capital base that allows the banks to have longer term money, which in Zimbabwe we don't really have because our capital base is limited to shorter term money. People keep their money in cash under mattresses and in cash circulation. So that money doesn't really get into the banks. And even the deposits that do get into the banks, people are firstly sensitive towards the value of their money in being in that bank as opposed to being in an instrument that's more liquid or more trustworthy, because there's been banks several times in Zimbabwe that have let down people with losing their deposits, with currency being converted overnight into other currencies, losing value overnight, and of course the excessive charges. If you look at the tax that's charged on bank transactions. So I think there is a need for government to look at a more attractive financial platform for people to bank. And whether that's longer term savings, that could be a tax-free instrument for pensions to start be built up. But for as long as people are not investing into the long term, it's very difficult for the long term money to attract capital. So if you take the likes of, and I was in Victoria Falls last week with the group CEO for Old Mutual, and we had this discussion. If you don't have the market supporting the longer term financial instruments that we need to have in the structured capital markets, we cannot see mortgages being built because there simply isn't the money. So it's a noble idea that government has the new title, both for agricultural land and urban land, and I think that will unlock potentially $1 trillion is my estimation, $1,000 billion US dollars. But the problem is we don't have the capital to match that ownership. So we really need to be able to bring in long-term capital, and this comes back to the elephant in the room for me, which is the US dollar. We need to extend the tenure beyond 2030, because if you talk about a mortgage, no one is going to give you an international mortgage for 5 years. It's going to be 20, 30, 50-year mortgage.
Just to jump in there, you spoke about the dollars. You declared a $2.4 million dividend for the full year. And of course, shareholders are smiling their way to the bank. May you speak briefly on that particular dividend?
I think we've guaranteed a certain amount of dividends to our shareholders, which we've consistently paid out in the last 2 years since we've been listed. But I think the point for me is not so much on the dividend payout, but on the capital appreciation of the balance sheet. So if you look at the equity in the business, it's increased significantly in the period. If you look at the assets under management, the assets that we have in the business, over $200 million today. So I would confidently say this year's results would take us closer to the $300 million number. And we are reinvesting a lot of the profits into the business, which is showing on the equity side of the balance sheet.
Right. Lastly, your $1 billion BRICS by 2050 vision sounds ambitious and very much symbolic in terms of what you're aiming at achieving in this particular market. May you speak to your outlook where your business ventures in this economy is concerned?
Our billion brick vision is real. We're now today proudly at 84 million bricks. We actually have a brick counting meter on every site, digital brick counter, that counts the number of bricks being used in construction at that site, in total sites and total pipeline. And I really think that we've started a national movement, brick by brick, one brick at a time. We're showing that this can be done practically. Others are following suit, and the whole country now is building our country. So as we do that, and looking at the question you asked prior, price sensitivity, I don't believe we've yet reached a ceiling of pricing. I still believe we're below the region. So we will see capital appreciation in pricing in the next few years. And I think as we continue to build more product, people have more confidence in the market. So just what we're doing creates a lot of confidence, but collectively what everyone else is doing really sends a clear message.
And that's a wrap on Beat the Market. I'd like to thank my guest, Mr. Ken Sharp. Thank you.
Thank you,
for
Ivan.
appearing
Thank you,
on
thank you,
Beat the
thank you.
Market. Do follow us, of course, on our social media handles at Zim Papers TV Network as well as at ZTN Prime. Your views and your thoughts are important to us. Remember to catch us every weekday at 2 p.m. Central African Time for the juiciest business stories in Zimbabwe, on the continent, as well as beyond. I'm Eben Mabunda, the money man. Let them do what they do. When we do what we do, we mean business. Thank you for watching and have a good day.